Welcome to StockMarketPending.com. We had a big earnings report last week on CMG, and we did buy some put options on CMG. And what we did was that we had a September 145 put here at 5 contracts. Okay? And what we want people to be aware of is and I'm not going to go into anyway, they were $17.50. We started getting in with $1 of the low. It took out a lot of our risk. We can always come out of the trade and get long if we have to. Or we can buy a long position when we know where the lower support level isn't going to break. However, it's a September 145 put, 9/18/2010. And part of the analysis here is that the huge upside in it was that you're due for retracement, $12.34. It closed at 133. The low gap was 137. That was the high. And so what we did was we went in and took a partial position at the 145 put strike price, as I've already showed. What we are going to be looking for here in this trade is that now that the earnings are actually out of the way, is what happens on Monday is that we get a closing price below 143.08. Okay? And or 143.08 falls in value. Okay? The other thing that's in play here is that percent DS goes down in value, not up in value, meaning that it's trying to put a bottom in at 63.55 on a weekly to 66. That's what that big bottom off of there is, what populated the number. The CCI is still minus 18 from minus 2 the prior week. We're going to be watching that carefully. And basically, we're going to be watching is that this weekly MACD bar does not go higher in value. So let's take a look at the MACD bar. It's right here. And what we want people to know is that this last high here was 11.88. This high here is 11.675. And we don't where the equity or the name starts getting in more support level is that to buy the 140 call off the bottom would support the fact that if this goes higher in value, then in the short term, any down move, what we would do is we would go to CMG here and we go to the 140 call that already made a huge run. But here is the 140 call on a weekly level. It got down to 1330. Or no, I'm sorry, that's not the right reading. Looks like it got down here, right there at $2.56. Made a high of 880, where before the calls were way up here. So that 140 call for August would be a great way to hedge that 145 put, which is right here. So the thing about this trend is, and let's keep this in reality, we've been doing this for 30 years, so we think that we're done enough of it to know. And part of that weekly chart on CMG is a chart, but let me show you here the 140 call. It was a low of 440. It went 100% higher. They took more premium out of in the money 145 put because the equity closed. It made that big huge move, so they took more premium of the 145 put because it was deep in the money at the time. However, they took $10 out of that. Now they got a 100% move here too. So basically, with that closing price of 879, if we pull back on the weekly chart in the name, in the equity CMG, and it holds support and they drop this down to, let's say, $6.30 or whatever, this would go up in value. But immediately, if that holds support, I got to trigger this side of the market on a purchase. I have no choice because that's what we do. And then at that point in time, out of the two instruments, the 140 call at support at a lower price, if we went down and I get hit here at 620, 650, that means these are going to go up. And if that holds support, I'm cashing out here. I'm going to get net long. Let them go up in value. Let this come back down even at a lower value and start buying in here to hedge off my 140 call gain. I just worked them back and forth. However, let's be very dominant in the actual equity trend cycle, because ultimately what's going to happen, folks, is that it's performed real well in the re-leveraging act with the consumer. Chipotle Mexican Grill used to be a high flyer. We used to buy it and hold it all the way up there. We also shorted it all the way down. And then we got down at the bottoms and we started buying it up. It re-leveraged those tops, pulled back. They came in with a good earnings report. Okay? So basically, we're going to take this piece of the trend only, and that 10-week moving average cannot hold the values. It's just that simple. So if it does hold the value, that means that the lower support level on a pullback right above the 140 handle is going to be right there. It's going to be right here on top of this bar right there. That's your support level. If you can't break it, then the 140's got to be bought. And the profit of the 145 put, as I said in this video, would be cashed out. You'd get that side because it would bounce. You'd get a lot of value. Then the put side would come down again, and you'd start working the trade that way. Just remember, half of that bar right here is 142.82. And we do not, another thing that we would buy the 140 call in is that this big down bar, half of that bar, maintains that closing price of 142.34 at support. We're coming out of the put and buying the 140 as well. Now, just remember that the 145 put is actually for the month of 9/18 expiration. And that shorter term call that we just got through showing you, I forgot to, now that 140 call at support is right here. That is in August. So in the short term, if that's going to play, I can buy this expiration in August coming up. I still have September. But I'm going to make my adjustments based on everything I showed you in the actual equity trend. And now that the earnings that reported are out of the way, and the shorts got squeezed when they were trying to short the name down here, got squeezed all the way up. SMF never did take a short position until after the earnings, and the majority of the equity price movement was up about $11.20 when we started buying that put option. And no, you can see here, 5 contracts, 750, down $10. We were not retail buyers up here. All the people that ran it, that had owned all them puts all that time, lost $10 in value, and we bought that value. And we'll buy the other value that we talked about as well, as I said, based on Chipotle. And if we're going to put in a bottom and we're not going to roll, if we pull back and hold, we're going to get net long. We're going to get net long